Good morning. My name is Todd Brickhouse. In June of this year, I was honored to join Basin Electric as its 5th Chief Financial Officer. I follow the likes of Arnold Ketterling, Buzz Hudgens, Paul Sukut, and most recently, Steve Johnson. I'd like to begin my remarks by thanking Steve, a gentleman that I've had the pleasure of knowing for over a dozen years. First, Steve still answers my calls when I have questions, although I will admit that my questions have cost me several glasses of red wine on occasion. But I'll also admit that Steve's answers do get more interesting when he's on that second glass of red wine. The second reason I'd like to thank Steve is because he has left Basin Electric in a very strong financial position. We have A credit ratings. We have in excess of $2 billion of liquidity that we will spend to make our system more reliable over the next several years. We have strong relationships with our financial stakeholders, many of whom are here today. And Steve has built an outstanding team of professionals that do great work for our members every single day. Although I've only been here for 5 months, I think I can speak for the entire Basin Electric family by saying that Steve has earned our respect, our admiration, and our thanks. So just a little bit about me. I came to Basin Electric from Old Dominion Electric Cooperative in Virginia. Being from Virginia, I know that my accent sounds somewhat strange to a number of you, but don't worry, I have any number of colleagues back at headquarters that are determined to have me speaking North Dakotan by this time next year. So, how does someone from Virginia end up in North Dakota? I'd say that there are 2 primary reasons. First, my wife is from Nebraska, and we've tried to keep our children tied to their Great Plains roots. So between holidays and vacations, we've made many fond family memories in and around Basin service territory. And I'll add that it is fantastic to be here permanently. The second way I ended up in North Dakota is simple. There is only one Basin Electric. As Todd mentioned earlier today, the size of our service territory, the scale and the scope of our operations make Basin unique in the utility industry. I first learned about Basin Electric when I read its annual report 20 years ago. I remember thinking to myself, what an interesting story. A cooperative that provides electricity to a service territory that feeds a nation. Then, about a dozen years ago, that story began to evolve. And it began to evolve because of your service to industries such as ethanol, oil, and gas. So, from 12 years ago to today, Basin Electric's assets are now critical to both feeding and fueling our nation. Simply put, Basin has captured my imagination for a long time, and I'm excited to be here. At the outset, I mentioned that Steve Johnson had built a fantastic team, and I'm honored to share the stage today with 3 of my colleagues who will talk to you about their respective areas of expertise. Joining me today are Katrina Wald, our Vice President and Controller, Kelly Bergquist, our Manager of Investor Relations and Financial Analytics, and John Klein, our Vice President of Procurement. First up is Katrina. Katrina is the 5th controller I have worked with in my utility career, and she is top-notch. She leads a team of 35 professionals who produce timely and accurate financials. They forecast and analyze our results. They file our tax returns, among many other duties and responsibilities. Katrina is going to review the 2021 audit and discuss 2021 and year-to-date 2022 financial results. Katrina, the floor is yours.
Well, thanks, Todd, for those kind words. And I may be able to help you out a little bit with some North Dakota lingo down the road here. First, I'll report on the financial results and the audit. Deloitte was once again engaged to conduct the independent audit of Basin Electric's and its subsidiaries' 2021 financial statements. The audit was performed using a hybrid approach, and that meant that Deloitte was able to be on site for fieldwork that is more conducive to in-person discussion. This was especially beneficial to the Basin team, as we have undergone a significant transition as a result of a number of retirements over the last year or so. However, that transition has afforded many individuals with opportunities for skills and career development. And I am so thrilled with how this team has seized those opportunities and adapted to the dynamic environment we operate in. As in years past, we are pleased to report that in 2021, Deloitte issued clean or unmodified audit opinions for the consolidated Basin Electric financials, as well as the Dakota Coal Company and Dakota Gasification Company financials. The Basin Electric consolidated financials, complete with the notes to the financial statements, are included in the 2021 annual report, which was published earlier this year. The annual report, along with the 2022 quarterly consolidated financials, is available on Basin Electric's website. So let's start with a quick recap of the 2021 financial results before we look at this year's results to date. Basin Electric ended the year with $7.9 billion in assets on a consolidated basis, and that is an increase of over 35% from 10 years ago. Consolidated net margins and earnings were $76 million, up slightly from $75 million in 2020. For Basin Electric, the biggest story of 2021 was the successful management and mitigation of Winter Storm Uri, and that was by the way of diversification, whether that be generation, fuel source, or geography, along with the utilization of other tools that allow Basin Electric to be a shock absorber for its members. In 2021, we also saw a recovery of member load, a 5% average increase from the lows of the pandemic, along with increased surplus sales. This was partially offset by increased maintenance expenses, as certain outages that were deferred in 2020 took place in 2021. In the end, a $30 million bill credit was provided in December, and $34.5 million of cash was distributed in the form of a patronage retirement in 2021. This was done while at the same time, the deferred revenue balance stood at $260 million at the end of 2021. Looking at Dakota Gas, in 2021, Dakota Gas had its best year since 2014 with a net loss of $1.5 million. Pricing was a large factor in the improved results as natural gas, fertilizer, and oil prices were higher, mostly in the last half of the year. In addition, diesel exhaust fluid, or DEF, volumes were higher with other fertilizer plants being in outage for prolonged periods. Now let's take a look at the 2022 year-to-date unaudited financial results through September. Electricity sales for the first 9 months of 2022 to Basin Electric's members were 21.9 million megawatt hours, generating $1.4 billion of revenue. And this represents an $88 million increase in revenue and a 7% increase in megawatt hour sales and revenue from the same period last year. Excluding the impacts from Winter Storm Uri last year, surplus sales have been significantly higher this year. The operations and marketing teams have done a great job of optimizing the members' assets. Sales in the West Market area set a monthly record in September, with the price averaging over $135 per megawatt hour for the month. On the other hand, operations and maintenance expenses have been impacted by high natural gas prices, with increased power generation coming from the gas units. In the area of purchased power, volatile and high power prices have contributed to increased operating expenses as well. DGC is having an extraordinary year, one that will be tough to replicate. Net income for DGC for the first 9 months of 2022 was $152 million, the highest net income ever for DGC in the first 9 months of the year. This is an incredible improvement from 2021, when the net loss was $16 million through the first 9 months. And revenue is close to $250 million higher and over 70% higher than last year. Prices and higher DEF and urea volumes are main drivers in the improvement. Prices for fertilizer are some of the highest we have ever seen, and in some cases, they are double last year's prices. In addition, synthetic natural gas prices have averaged close to $6 per MMBTU, and DEF volumes have exceeded expectations, coming in over 25% higher than last year at this time. On the expense side, the DGC team continues to focus on cost containment. However, operating expenses are up from last year. Like many others, DGC is seeing inflationary effects in the areas of freight, chemicals, and various other expenses. To wrap it up, on a consolidated basis for the first 9 months of 2022, the net margins and earnings of Basin Electric and its subsidiaries were $381 million, compared to a net margin of $185 million last year. Now I'll turn it back over to Todd.
Thank you, Katrina. As Katrina outlined, 2022 is shaping up to be a great year for Basin Electric. We recognize that although these margins technically reside on our books, the dollars ultimately belong to our members. So we are focused on deploying your capital in 3 ways. First, building a reliable and affordable system via investment in people and plant. Second, de-risking Basin Electric's financial position. And third, returning value to our members. I can speak for the entire Basin team and tell you that we are very proud that the board of directors has been able to approve the return of $263 million to members since we met a year ago. Now, we'll turn to Kelly Bergquist. In the past year, Kelly and our Treasury team have issued $300 million of bonds on behalf of Basin Electric, and that's at a weighted average interest rate of 2.97%. Kelly has helped maintain Basin's A credit rating. And over the summer, Kelly and the Treasury team renewed a $500 million credit facility that we'll use over the next several years to invest to make your system more reliable. Kelly also takes it upon herself to frequently remind me that y'all is not a word in North Dakota. So Kelly, congratulations on a great year. Take it away.
One of the strengths of Basin Electric that allows us to effectively serve our membership is our liquidity. Liquidity can be thought of simply as access to cash and is essential to continued growth, service, and our overall financial strength. Basin Electric focuses on maintaining a strong liquidity position, and the rating agencies point to liquidity as one of our top strengths, right up there with our strong membership and wholesale power contracts. Liquidity comes in many forms. One of those forms comes from our members who invest in the Member Investment Program. The Member Investment Program has provided liquidity to Basin Electric for years and continues to be a mutual benefit to our members who can pool investments with fellow cooperative members at a competitive rate, as well as providing Basin Electric with a stable source of liquidity. We thank our members for their continued support for this mutually beneficial program and look forward to many more years of serving your investment needs. If you'd like to hear more about the program, please reach out and we would be happy to discuss further. Another source of our short-term liquidity is our revolving credit facilities. This year, we extended one of our $500 million credit facility. We would like to take the time to thank our bank groups that partnered with us, committed financial backing to Basin Electric, and made this achievement possible. These relationships continue to be a key factor in our ability to provide affordable and reliable generation for the membership. Lastly, we look to long-term debt to fund our long-term assets, such as additional generation and transmission. Basin has worked hard over the years with the help of our bank relationships to cultivate an increasingly broad base of investors. Like our banks and our credit facilities, our investors partner with us to provide long-term capital to continue to meet your energy needs. Basin Electric closed on a $300 million private placement earlier this year to help fund generation and transmission program, as well as other general cooperative needs. The debt issuance was the first in history of Basin Electric, with a portion of the funds maturing with a 40-year term, and closed with a weighted average fixed interest rate of just under 3%. With our bank relationships leading the way, we were able to get out in front of the anticipated increasing interest rates and locked in rates last year and closed and received the funds in the beginning of this year. Also, in anticipation of our additional future debt issuances, we hedged against rising interest rates. These hedges will offset more than $40 million of future interest expense. Interest rates on debt are made up of two parts. One, the risk-free rate, and two, the credit spread. The risk-free rates you can reference are the U.S. Treasury rates. We continue to see these rates rise as the Fed continues to fight inflation. However, Basin's strong balance sheet and liquidity will help us face what inflation brings over the near term. We are positioned well, but will continue to monitor these as we look to fund our capital expenditures in the next 5 years. The credit spread part of our fixed interest rate depends in part on our credit ratings and investors' perception of our business risk in regard to being able to make payments. We use Moody's, Standard & Poor's, and Fitch ratings to analyze our credit strength and provide investors with a credit rating for Basin Electric. All three agencies affirmed our A credit rating this year. 4 key factors that attribute to our A credit rating include: 1, our strong member relationships maintained under the long-term wholesale power contracts, as well as the financial strength of those members standing behind those contracts. 2, our robust liquidity. 3, our revenue deferral program. And lastly, our disciplined fiscal management. Said another way, credit ratings are crucial to keeping our cost of capital down so Basin Electric can continue providing affordable, reliable, and responsible power to our members.
Thank you, Kelly. Unfortunately, inflation and supply chain issues have affected every person and business in our nation. So Basin is no exception. But in this regard, Basin Electric is well served by John Klein and his team of procurement professionals. On an annual basis, John and his team procure in excess of $400 million of goods and services on Basin Electric's behalf. This annual number is set to grow substantially over the next 3 years as we spend $2 billion to maintain your system's reliability. With that, I turn it over to you, John.
Managers Conference in Sioux Falls, I provided an update on some supply chain challenges we've been experiencing. These included domestic and international freight cost and delays, material and supply chain inflation, product lead time, and contractor availability. Today, I'd like to explain what we did to mitigate these issues and update you on the outlook of some of these challenges for 2023. This year, freight started off with a peak of 109 full container ships docked at the Port of Los Angeles waiting to be offloaded. As of last month, the backlog was down to 7 ships. A decreasing demand for consumer goods and an increased focus on moving commodities from the seaport to market has improved the outlook for shipping delays moving forward into 2023. Freight pricing has followed fuel trends, peaking this past June before temporarily easing slightly in recent months. Even with the increase in cost per mile, our logistics team has earned documented savings of over $500,000 through long-term negotiated contracts and combined freight loads. Looking forward into 2023, signs are pointing to improvements over early 2022. However, we are also seeing volatility on the horizon. Many freight forwarding organizations are experiencing cancellations of less than full container ships, an ever-growing shortage of truck drivers, and a return of high diesel prices. All of these issues could lead to shipping delays and additional costs. As most of you have experienced in your work and personal life, commodity pricing has shown a great deal of volatility. As 2022 wore on, some commodities such as copper, steel, aluminum, and lumber took a significant step backward in pricing since their peak earlier this year. Some have seen as much as a 60% decline. Other manufactured items such as boiler tube, pumps, pump parts have shown a flat trajectory in the last 2 quarters. However, commodities such as chemicals and petroleum products are volatile, hard to find, and pricing is showing as much as a 12% surcharge. Due to pricing volatility, vendors remain cautious and are resistant to enter into fixed price agreements. Instead, they are seeking to add language surrounding around consumer price index fluctuations. Our procurement team has remained steadfast in negotiating strong contracts and material alliances. Our partners help us find the most competitive pricing for our parts and supply needs while keeping our facility requests fulfilled. Many of these vendors warehouse commonly used parts at their shop, which has helped us maintain flat inventory levels across the cooperative for 2 years running. Finally, our partners negotiate with their upstream suppliers to minimize and sometimes forego price increases as a testament to Basin Electric's volume and buying power. Lead times in 2022 have proven to be a wild ride. The war in Ukraine, remnants of COVID-19, lack of worldwide workforce, and freight issues, just to name a few, have all contributed to very large swings in lead times. Typically in the past, our suppliers were able to consistently quote acceptable lead times, and we could trust those dates. But during the past year, we've had items such as boiler tube go from typical 4 to 9 week lead time up to 60 weeks and back down to 14 and 20 weeks. The lead time for pumps, pipes, valves, fittings, and steel are either doubling or tripling from day to day or getting cut in half with no real pattern. Transformers and other large capital purchases have shown to be, in some cases, up to 2 years out. In an effort to mitigate lead times, Basin Electric and DGC's planning and operation teams have worked with our procurement staff to make a conscious effort to turn back the planning clock by several months. This helps allow enough time for our materials, parts, and supplies to be delivered to site when they are needed. In addition, our procurement team is tracking orders and communicating with vendors to ensure agreed-upon delivery dates are achieved. As we explore contractor and staffing availability, the tides have changed. At the start of 2022, we had not yet experienced the inflationary pressures we were seeing with commodities. We experienced signs of workforce shortages, specialty contractors with limited availability, and failing companies generally due to COVID-19 shutdowns. Then this all changed. Labor participation sank to a 40-year low, and unions negotiated new contracts showing significant annual increases. With the retirement of many skilled workers, inexperience contributed to a reduction in productivity. As a result of labor shortages, contractor backlogs quickly became full. Basin Electric found a need to expand our bidders list, realizing many companies refused to bid due to decreased staff availability. In order to get a strong competitive bid, we started looking to award projects 6 to 12 months in advance. Some contractors still refuse to bid on a fixed price basis, attempting to move productivity and cost risk back to us as the cooperative. While inflation has driven up pricing across all commodities compared to pre-COVID-19 years, we found many wins within our contracts group. During the bidding process, we uncovered some highly qualified turbine contractors who will perform specialty work on our turbines across the basin fleet, saving significant dollars over the next 3 years. Regarding the Pioneer Phase 4 project, we have negotiated strong fixed price contracts to procure combustion turbines and reciprocating engines with many protections in place for late delivery, quality, and performance. Additionally, at Pioneer Phase 4, we negotiated an open to close book EPC contract for engineering and construction work with a trusted contractor who is very experienced in performing this work. This contract structure is very transparent in the open book phase and will offer numerous protections for quality, performance, and schedule in the construction phase. Finally, I would be remiss if I failed to mention our Trusted Alliance contractors. These include scaffolding, industrial cleaning, and emergency services, just to name a few. These contractors mobilize to our facilities on a moment's notice, 24 hours a day, 7 days a week, 365 days a year. We bid this work on a triennial basis, and each contractor must perform each time they get a call. The value of our contractors provide to the cooperative is a true testament to the strong partnership we have formed with them. Through COVID-19, weather events, holidays, supply chain shortages, these contractors are vital to keeping your lights on. Back to you, Todd.
Thank you, John. So it should be obvious by now why it is such a pleasure for me to report to Basin Electric's headquarters each day. I get to work with technically skilled and collegial colleagues like John, Kelly, and Katrina. And together with 1,800 of our other teammates, we strive to provide you, our members, with reliable and affordable electricity produced in a safe and environmentally responsible manner. As was mentioned earlier, we have documented many of these efforts in our first sustainability report. That report is available on our website, and it will be mailed to all of you along with our annual report in April. In closing, I'll remind all of you that in each of his 8 financial reports to Basin Electric's annual meetings, Steve Johnson closed with the same words, and they remain true today. So I'm happy to quote Steve. Today, I can proudly report that in the opinion of management and with the concurrence of the board, Basin Electric is in extremely sound financial condition and stands ready to meet the needs of our members for years to come. Thank you very much.